The tax deadline is April 30th, and if you don't claim these credits in time, you're leaving money on the table. Canada has a ton of different tax credits, and it's easy to miss out on big savings. And today I'll walk you through the key tax credits you need to know about. We'll start with the most common ones, then move into the hidden gems many people overlook. And stick around till the end where I'll show you how to stack multiple credits together for even bigger tax savings. Note that the first credit on this list is automatically applied, but you'll need to manually claim the rest on your tax return, so be careful of that. The basic personal amount, or the BPA. This is a non-refundable tax credit that allows Canadians to earn a portion of income tax-free before federal income tax applies. For the 2025 tax year, the BPA is $16,129 for individuals with net incomes below the 29% tax bracket threshold. Next is the age amount tax credit. Canadians 65 and older can claim the age amount tax credit, which is a non-refundable credit designed to reduce taxes in retirement. For 2025, the maximum claimable amount is $9,028 federally. The credit is 15% of eligible income, reducing taxes owed by up to $1,354. But be aware, if your net income exceeds around $44,000, the credit is gradually reduced. So for example, if Selena earns $42,000 and is 66 years old, she qualifies for the full $9,028 age amount credit. But if she earns $46,000, the credit will start shrinking. This tax break helps retirees keep more of their money while managing taxable income efficiently. Canada Caregiver amount. The CCA provides tax relief to individuals supporting a spouse, common law partner, child, or other dependent with a physical or mental impairment. For the 2025 tax year, eligible individuals can claim $8,601 for infirm dependents age 18 or older, and $2,687 for a child under 18 with a disability. The credit amount is reduced based on a dependent's net income, and eligibility varies. In some cases, additional amounts may be claimed for spouses or common law partners. Make sure you retain medical documentation if required. Medical expenses tax credit. This credit helps Canadians offset out-of-pocket healthcare costs. You can claim eligible medical expenses that exceed 3% of your net income or $2,834, whichever is lower for 2025. Eligible expenses include things like prescriptions, dental care and vision care, physiotherapy, psychotherapy, and other medical treatments, medical travel expenses if care isn't available locally. And to maximize your claim, combine expenses for yourself, your spouse, and dependents. Keep detailed records and receipts for verification. Many Canadians forget to track these costs, so don't miss out. I go into this in way more detail in another video about medical expenses tax credits, so check that out if this expense applies to you. Pension income amount. Canadians receiving eligible pension income can claim a non-refundable tax credit on up to $2,000 of pension income at both the federal and provincial levels. This credit is calculated as 15% of the lesser of $2,000 or eligible pension income received. Any unused portion can be transferred to a spouse or common law partner. Pension income splitting allows couples to allocate eligible pension income for tax savings. Canada Workers Benefit, CWB. The CWB is a refundable tax credit designed to support low-income workers. For 2025, eligible individuals can receive up to $1,633 for single people with no children, or up to $2,813 for families. The benefit starts to phase out at $26,855 for singles and $30,639 for families. Advanced payments are available, meaning you can receive part of the benefit throughout the year instead of waiting until tax season. If you or your spouse has a disability, an additional supplement of up to $843 may be available. Tuition tax credit. This credit allows students to reduce their income taxes by claiming eligible tuition fees paid to a post-secondary institution. So who can claim this? Well, you must have paid at least $100 in tuition fees to a recognized educational institution in Canada or abroad. The courses must be at a post-secondary level or improve your occupational skills for students aged 16 and above. Online courses may qualify if they meet full-time attendance requirements. And if you don't need the credit now, you can carry it forward to a future tax year or transfer up to $5,000 to a parent, grandparent, spouse, or common law partner. Donation tax credit. Donating to registered charities can provide significant tax savings. For 2025, the tax credit rates are 15% on the first $200 donated, or 29 to 33% on amounts above $200, depending on your income. Up to 75% of your net income can be claimed, and if you don't use your donation credits immediately, you can carry them forward for up to 5 years. In-kind donations such as stocks or securities may offer additional tax benefits. Charitable giving can be both impactful and financially rewarding. Canada Child Benefit, or the CCB. The CCB provides tax-free monthly payments to help families with their costs of raising children. In 2025, parents can receive up to $7,997 per child under 6 and $6,748 per child aged 6 to 17. The benefit is income tested, meaning payments phase out as family income increases. No tax is paid on the amount received. This tax-free monthly payment is designed to help families with the cost of raising children under 18. Once you apply and are deemed eligible, payments are automatically issued without the need for annual claims. Disability amount. Individuals with severe prolonged disabilities may qualify for the Disability Tax Credit, or the DTC. The 2025 federal disability amount is $10,138, reducing taxes owed. Any unused portion can be transferred to a spouse, common law partner, or supporting relative. You must apply for this non-refundable tax credit using Form T2201. Once approved, you can claim the credit on your tax return. Before going on to the next benefit, if you want to save more on taxes in retirement, check out our free guide with 5 proven strategies to keep more of your money. You can grab your free copy on our website, a link is in the description. Amount for an eligible dependent. If you are a single parent or supporting a dependent relative, you may claim a non-refundable tax credit of up to $16,129 in 2025. To qualify, the dependent must have lived with you in a home you maintained, and their net income must be below the set threshold to qualify. If eligible for the Canada Caregiver amount, you may also be entitled to a higher credit. Canada Training Credit. The CTC is a refundable tax credit designed to help Canadians cover the cost of eligible education and job training. Eligible individuals can accumulate $250 per year towards their Canada Training Credit limit, up to a lifetime maximum of $5,000. To qualify, you must meet income thresholds. For 2025, you need a minimum working income of $11,821 and a maximum net income of $173,205. Interest paid on student loans. You can claim a non-refundable tax credit for 100% of the interest paid on eligible government student loans. This applies to both Canada student loans and provincial student loans. Private loans do not qualify. If you don't use the credit immediately, you can carry it forward for up to 5 years. Digital News Subscription Tax Credit. You can support Canadian journalism while saving on taxes. You could claim a non-refundable tax credit of 15% on up to $500 per year spent on eligible digital news subscriptions. The subscription must be to a qualified Canadian journalism organization, such as CTV News, the personal finance column I write for every week. Home accessibility expenses. Seniors and persons with disabilities can claim up to $20,000 in home renovation expenses to improve accessibility. Eligible expenses include installing ramps, grab bars, walk-in tubs, or lowering cabinets. The credit reduces taxes by up to $3,000, which is 15% of $20,000. It can be combined with the medical expenses tax credit for additional savings. The ultimate tax saving combo: how to stack multiple credits for bigger refunds. The key to maximizing your savings isn't just knowing about individual credits, it's about stacking them together for even bigger tax breaks. Many Canadians don't realize how certain tax credits and deductions can work together, effectively reducing taxable income or boosting refunds. Here's a common example for retirement tax savings that we do a lot of planning for our clients with, which is the pension income amount. This is up to $2,000 per person in eligible pension income, which can reduce taxes. For those 65 plus, it's worth up to $9,028 federally in 2025. And we went through this previously, but here's how it works. Say John and Linda are both retired, but John has a large pension while Linda has a smaller income. Since they're both over 65, they can each claim the pension income amount to lower their taxable income. John also qualifies for the age amount credit, giving him an extra tax break. So the stacked savings are the pension income amount plus the age amount, which equals to lower taxes and a bigger refund. And here's a bonus tip: pension income splitting could save them even more by shifting some of John's income into Linda's lower tax bracket. I didn't cover that in this video, but check out my other video on income splitting for a full breakdown. Another example is the family tax saving combo. Stack these for bigger refunds. Families can combine multiple tax credits to reduce taxes and increase their refunds. If you have, say, kids or dependents, here's how to maximize your savings. Canada Child Benefit. which are tax-free monthly payments for parents with kids under 18. Then there's the child care expenses deductions, where you can claim daycare, babysitting, or after-school program costs. And you have Canada Caregiver amount for parents supporting a child with a disability. Here's an example. Meet Sarah and Mike, who have 2 young kids. Their children are in daycare and one has a disability. Here's how they stack tax credits. For the Canada Child Benefit, they receive tax-free monthly payments to help with child-related costs. Then they have the child care expenses deduction. Mike claims daycare expenses, lowering his taxable income. And also there's a Canada Caregiver amount. Since one child has a disability, they get an extra tax credit. And the stacked savings are the CCB, plus the child care deduction and the caregiver credit, which equals to thousands of dollars in tax savings. And here's a bonus tip. Families can also split income by contributing to a spousal RSP to reduce overall household tax liability. These are just some of the tax credits that can put money back in your pocket. But here's the thing, there are so many more ways to optimize your taxes and combine credits together. If you're serious about tax saving, visit Blueprint Financial to see how we can create a custom tax strategy just for you. Don't forget to like and subscribe so you don't miss out on more money saving tips.